Happy Thursday. You can do anything you want today because today's the extra day that shouldn't exist. Happy Fleet Day. Happy February 29th, once every 4 years. Here we go, team. All right. In this week's update, the PCE came out today, and we'll talk more about that in a second, but it kind of was as expected, which makes rates just about the same as they once were. So I'll show you in a second on the next graph, but here's from Mortgage News Daily. This shows the rates are in the low sevens right now. No bueno. You can see that we've kind of been treading water for the last week, 2 weeks, give or take. You can see those little graphs. The good news is we're still above that blue line, the 200-day moving average. That's a good thing. We'll see where they go from here, but we are in that narrow trading range. So I just don't see a lot in the near future for improvement, unfortunately. So rates are kind of where they are. As I mentioned earlier, the PCE, personal consumption expenditures, that is the Fed's favorite measure of inflation. So when they say they want inflation below 2%, this is what they're measuring. Came out. So the headline went from 2.6 to 2.4. That's good. But the core, so you strip out food and energy because the Fed can't control, oil and gas, and they can't control food. But all the other stuff that they can control, that actually went up 0.4 month over month. That's bad because if you extrapolate that for the whole year, that's a really high number. That's close to 5%, 4.8. So that's not good for the month over month. However, the year over year went down from 2.9 to 2.8. That's good. Not great, but that's good. The bad news, the 6-month trend, so that's what they've really been paying attention to. It's what's it been like over the last 6 months. And that was at 1.85. Now it's at 2.46. That's bad. So it's going in the wrong direction. So what does this mean? Ultimately, I don't think the Fed's going to cut as soon as everybody thinks. So supposedly there's a 50-50 shot they'll cut in June. I'm not so sure. Time will tell. I've been kind of saying that I think the headlines for 2024 have been a little aggressive. We shall see. So you then ask, why is Homer Simpson over here on the right? That's for my own humor. That was Homer a long time ago when I was growing up watching The Simpsons. Homer's trying to buy something, and the guy's like, that's good, that's bad, that's good, that's bad. That's what this was. So that was my own amusement there, team. All right, next, as I mentioned, the Fed. So Waller came out, and I actually like what he always has to say, but for the most part, he basically says he doesn't see below 2% anytime soon. So again, not ideal. So if the Fed keeps holding their rates, that just means things are going to kind of stay where they are and have been. There's some fancy graphs to kind of show you why he thinks that. Fannie Mae, they've made new forecast. So you can see that they still think, supposedly, by the end of this year, we'll see rates in the fives. I would like that. I'm just not so sure. So there you go. You can see how they think they'll stay in the high fives in 2025. I would love to, guys. I'm rooting for it, but I just don't know we'll get there. Delinquency rates. I thought this was an interesting graph. You guys can see the non-housing debt, the red, it just keeps growing and growing and growing. That's credit cards. So not only are mortgage balances growing because people are doing cash outs to pay those suckers off, but the balances increase as well. And this was astounding. Supposedly in one quarter, credit card balances increased over $50 billion just in the Q4 of last year, which is wild to me how much money that really is. All right, let's make it happen. Let's have some fun. This was fascinating. Here's how much $1 million buys you in these cities in square footage. So for example, Miami, the biggest one, which I thought was a little surprising. I did not think that'd be the most expensive. In Miami, you can get a 646 square foot place for $1 million. Let me say that again. 600 square feet for $1 million in Miami. That's wild. New York, 367. You guys can see the chart. I won't read it to you, but I just thought that was so cool. All right. If you got 200 grand, you could have bought this car. I just thought that seems like a real steal. I'm not a car guy, but a 1950 Mercedes, really cool looking. So there you go. And in Oregon, I did not know this was a thing. So you Pacific Northwestern folks that you're watching this, you're like, yeah, duh. But I did not know this. Apparently, Oregon has made it so that it's illegal, literally illegal, to build a house outside of city limits since the 1970s. They're doing that to make sure they're green. However, due to the cost and affordability issues that are going on up there, there's at least talk that maybe they do start allowing building outside the city. So I didn't know that. I'm just sharing you because I learned something. And then for Hawaii, you Hawaiian folks out there, apparently Mark Benioff, who is the Salesforce billionaire, worth $10 billion or more. He's been buying up land in Hawaii under like 6 different LLCs. So it reminds me of Walt Disney. If you guys don't know this, Walt Disney back in the day, it was easier to do this back in the whatever it was, I don't know, 50s, 60s, whenever Walt did this. But for Disney World in Orlando, he bought like all that land in Southern Florida under a whole bunch of different company names to where he amassed all the land in Disney without anybody truly knowing it till it was too late. And he already owned half of South Florida. So there you go. Chasing excellence, guys. How to be better, what to do, scripts for calling past clients. We'll put the link in here. I'm not saying it's the greatest. It's just a culmination of a bunch of things we've done, and it actually does yield results. Highly recommend watching that. And then, as always, the meme of the week. Shout out to the marketing folks. I know this is still like what 3 weeks old now. I still love this. When you see someone else buying your dream home because you decided to wait until rates come down. I thought that was fun. Good job, marketing peeps. Love you. And guys, let's get social. If you're not following us, you should. I think it's entertaining. My team does a really good job of making me look dumb. So feel free to share this, subscribe, all that fun stuff. As always, guys, if you need something from us, please reach out. Hope you have a great and wonderful weekend. And again, enjoy the leap day, guys. It's a free day. Go do whatever you want. Have a good one.